Okay, we are going to get started. So my name is Natasha Phipps. I am the CEO of WealthShare Real Estate Investment Trust based out of Calgary, Alberta. And welcome to our info session where we're going to discuss what WealthShare is, who we are, what we're all about, and also some information about why you might want to consider REITs like us or other ones out in the marketplace and the opportunity that investors have to invest in vehicles such as ours here in Canada. So before we get started, I do need to show our disclaimer. This is available on our website as well, but our investment disclaimer is reviewing that what we are covering here tonight is for informational purposes only. This is not a solicitation for investment and to get independent advice as well. Okay, we're going to get started. So who are we and what are we? There's a lot of different types of structures out there when you start looking into the passive investing world. And WealthShare is a private REIT. REIT is a real estate investment trust. We're based out of Calgary, Alberta, like I said. And our mission and goal is pretty simple. We want to provide Canadians the opportunity to invest passively in multifamily real estate while sharing our fundamental long-term values and vision that real estate has, and we target a 12% annualized return. Our core values are transparency, accessibility, and providing education. So I want to talk about those briefly. Transparency is a huge one, and it's really hard to know what that means when you're out there shopping around and looking at things. With our structure and with our requirements to be compliant, the number one most important thing when it comes to transparency for us is our annual independent financial audit. So our returns are not our opinion. Our audited financials are not just our opinion. They are a result of our annual audit. And that gives our investors annually a very good look under the hood in terms of what is actually going on here day to day. And those audits are very intense. They are very detailed. Every bank charge, every penny you can think of does go through the audit process and takes Monique, our CFO, several months to complete. So really, really important when it comes to transparency. And also transparency. We do a lot of events such as these, and we are very open when it comes to market challenges, what is actually going on out there, what we're learning along the way. So transparency is something we talk about all the time here internally and externally, and something that we hope aligns with our investors' core values as well. The second one is accessibility. This one is so important to me. My career started as an investment realtor, and I am a huge proponent of owning investment real estate, but it is also getting harder and harder to do so for individuals to do that here in Canada. And I was noticing that more and more as the years gone by of my 17-year career. And what we want to do when we kind of sat down and thought about who is WealthShare and what we want to be is provide opportunity to as many people as possible. So we do that a few different ways. Number one is we keep our minimum investment low. So our minimum is $5,000. So you decide what you want to invest or are comfortable investing above our $5,000 minimum. And we are also open to accredited and eligible investors. There is all kinds of opportunities for investors at the accredited investor status, which is a definition defined by someone's net worth or their income here in Canada. And it does limit what opportunities you might be able to invest in that are reserved for accredited investors only. And so we wanted to do as much as we can with the opportunity available here in Canada to be as accessible to as many people as possible. So low minimum, and we did everything we could in terms of our structure to make sure we could accept investment from not just accredited investors, but eligible as well. And the third one is education. We do a lot of sharing here at WealthShare. We do events constantly, whether those are live in-person events. We do online webinars monthly. Last year we did, I think it was 27 events between live events and webinars. And the bulk of what we're always talking about is from an education standpoint. We're not here to just sell. In fact, we're here to build trust with you by sharing what we know, the knowledge that we have, and also sharing challenges along the way. So those are our three core values of who we are here at WealthShare. So our team is really, really important. I can't tell you how many times I've heard, Natasha, I'm investing with you because I like what you're doing. I trust you. And that is built over a career in this real estate space. And I have an awesome team here that has similar experience. So myself as the CEO, we have Rodney Phipps as the COO, and Monique Verlan is our CFO. So we are all co-founders of WealthShare Real Estate Investment Trust and also trustees of WealthShare REIT. Most recently, we have joined Michael DiPaolo to our team on the investor relations side. So Michael is here this evening as well. And if you're reaching out to us, you might be hearing from Michael as well. The line at the bottom of the presentation here is really important. And this is important if you're looking at different groups out there to see who are the people actually making decisions. So how things work with WealthShare is we have a 6-person board of trustees. So us as co-founders as well, but then we have 3 other additional trustee members. 2 of those trustees are fully independent trustees. Sean Wilson is a local Calgary really successful businessman. He has started up many companies here and is a huge resource for us in terms of the path that we are on. Number 2 is Yves Gay. He is in the construction space here in Calgary, from single family to multifamily, has an extensive experience, over 30 years of experience in the new construction space. And third is our most recent trustee, Kyle Hampson, who's a lawyer out of Ontario. So any major decisions, any, points where we need to pivot or make a decision of what to do with WealthShare, any acquisitions, it all has to be decided upon by the board. So we meet quarterly and make those decisions as a group together. So it's not just me making a decision, it is the board of trustees. So that is who we are and behind the vision of this. So let's move on a little bit into what is the REIT, why does it benefit you, and why, as an investor, should you consider it? So a REIT, put really simply, it's just a passive vehicle that allows investors to pool their money towards a common goal. There's all types of REITs out there that invest in all types of different real estate and projects. We are just not really reinventing the wheel. We are buying multifamily real estate in good areas and managing it really well. That's what we're doing. But there's all kinds of different ones out there. So a few things to note about a REIT in terms of compliance and accountability in the structure is, first is being compliant and registered with the Canadian Securities Administration. So we are governed by Canadian securities law. Every single investor that comes into the REIT, every single closing that we do in terms of subscription agreements into us, and our annual updates of financials and offering memorandums, all of those are filed with the Securities Commission of Canada and make sure that we are compliant and are following all the rules that we should be. The second one is a REIT in combination with an offering memorandum makes the fund accessible to accredited and eligible investors. If we had the exact same structure but no offering memorandum, then it would be accredited investors only. So if you're out there looking at opportunities, sometimes they do have a similar structure but no offering memorandum or OM, and that might be why they are not accepting eligible investors, and very likely is. And the third one we already talked about, of course, is the annual audit financials. I'll tell you at the end of the presentation where you can find those if you'd like to go look at them. And that is the very basics of a REIT. Now, benefits to you as the investor in terms of the actual structure. Number 1 is tax efficiencies. So the structure is an acceptable place to place registered funds. So your RSPs, your RESPs, your LIRAs, your TFSA, a lot of investors want to take control of what they want their retirement savings funds to be invested in, and we are one option for them. So we love that. The second one for an investor is the professionally managed portfolio. Many of our investors have either been active investors themselves or are as well, and they just want to tap into us as the management team, boots on the ground, and maybe take part in something they wouldn't necessarily do on their own. And that might mean different asset classes that they're not in. And then the third one is being able to access larger opportunities that us as individuals can't really do. So that's a huge opportunity. And the last one is maybe my favorite one, other than registered funds, is the ability to diversify. In the 22 years I've been investing in real estate now, I can tell you that diversification, and the probably thousands of investors I've spoke to, is the most important thing when it comes to managing risk. And that doesn't just mean diversification of, asset type. It also means location, investment timelines, strategies, teams, and diversifying your funds is a really great way to tap into something that might be, performing at a very different place than something else in your portfolio is for a period of time. So it's a good way to access diversification easily without having to do it all yourself. So I want to talk briefly about multifamily real estate. I think if you are a real estate investor, you likely get started in the residential real estate space. So single family houses, condos, that kind of thing. And the multifamily space up from there is extremely different. A lot of what you learn in that single family space honestly doesn't apply in the same way when it comes to multifamily real estate. So the first and most important thing about multifamily real estate, and this applies to anything above 5 or more doors in terms of real estate, is asset valuation, or the portfolio's value. It's valued very differently than the residential space. It's valued based on your net operating income. I love this as someone who's been self-employed entrepreneur, because really what that means is the better job you do taking care of these pieces of real estate, the more your portfolio will be worth. The more you manage your expenses and your management costs and create consistent rent and consistent tenant success, the more stability you'll have. And that directly relates to net operating income. So it doesn't matter what so-and-so across the street sold their property for. It matters most about what is happening when it comes to the actual financials. Number two is the financing opportunities. And most people, this is the first thing they think of when it comes to multifamily real estate, and it is quite different. There is a lot of different types of mortgage products out there in the multifamily space. We have taken advantage of the CMHC insured MLI programs. I won't dive into that too deep because I could talk about that for an hour straight, but we are using unique financing opportunities to maximize our returns with our real estate. And the CMHC insured pathway does allow longer amortization periods, more favorable loan to value, and also, especially important in the last few years, is your interest rate on your debt is driven by the bond market, not the Bank of Canada rates when it comes to CMHC insured debt. And so that has been favorable in recent years with high interest rates here in our country. So totally different financing structures and opportunities available. Number three, which is also really exciting as we grow, is economies of scale. Our expenses per door will continue to go down the more that we grow, which is something that we're very excited about. And the last one is the low risk efficiencies and how they directly impact your net operating income is something that I really, really love. So really every $50 matters. Every pet fee, parking fee, every kind of management of costs you can directly impacts pretty substantially, like more than you would think. So those little efficiencies that you can do by adding maybe storage or adding something to a property to increase income a little bit goes a long, long way. So we love those. And those are not big risks. We're not doing huge projects or huge renovations to be able to increase value and create efficiencies, which is really, really cool in the multifamily space. Last one is investment into hard assets. Means income stability and preservation of capital. So right now in the world economic landscape that we're all in, there's a lot of uncertainty. There is a lot of volatility in the markets. And what I love about real estate is we don't have that same level of emotional roller coaster day to day, hour to hour that you might see in the public markets. And so I do love that about real estate. It's always a long-term vision. And that also comes, especially when we start thinking about our preservation of capital, or how to make sure our money is actually growing and not losing value by just sitting in our bank accounts. So we love hard assets for that reason. It's something you can see, feel, touch, drive by, and know exactly where your money is being invested. So how do you make returns in this space when it comes to real estate? And it's some of these are similar, whether it's single family homes or multifamily real estate, but we'll go over it real quick. The first one people think of is cash flow, and cash flow is important, and you want to be cash flowing. That is one element, but that is just one piece of the pie. And this is often where people get stuck on, is this is all that they think about. Value add, especially in multifamily real estate, really has an awesome multiplier that will increase value like we discussed. So even minor renovations, cosmetics, paint, a few things that will increase your rent a little bit has a direct effect on the valuation of that piece of real estate. Refinancing is another huge one, particularly in this space if you're doing renovations that might, quickly increase a property's value. Very common strategy in multifamily to have a kind of shorter term financing strategy, get the property renovated and turned over. So refinancing that way, or as in our case, every 5 years, we are not signing any debt longer than 5 years. So every 5 years, we want the opportunity to be able to refinance, which will bring cash distributions to you as our investor. This one, and the most forgot about return in real estate when people get emotional, is debt pay down. People tend to only start thinking about cash flow and forget the debt pay down. And the reason we are investing in real estate to begin with is leveraging the bank's money. It's the most predictable part of all of this, is we can see the schedule of how that debt's going to pay down and what that means for us as property owners, landlords, or investors. And then, of course, passive appreciation over time. Rental income, goes up, property values go up, land values go up over time. Long-term picture here. And all of these things combined is how you generate your returns in this space. The housing crisis here in Canada is something that comes up a lot. I talk to a lot of people about this, and it's no secret. So we won't spend a ton of time on this. You can find all kinds of research on this. But we are focused here in Alberta, obviously, like I said. But as a country, CMHC has maintained that an additional 3.5 million housing units are required by 2030. That's in 5 years to restore Canada's housing market. Now, we're not going to get into politics. We're not going to dive into that. But what this does mean is that we do need more housing as a country. And a lot of people want to be a part of the solution, but they don't necessarily want to own real estate themselves. So something like what we're doing is a great vehicle to do that. The biggest gaps in terms of the amount of housing out there are in Ontario and BC, but Quebec and Alberta also need more housing. So there is a need in many, many parts of our country. We are seeing construction up, of course, especially here in Alberta, 4% increase in 2024 as a country, but that's still nowhere near what the projections CMHC is saying that we need. I think we are going to see an interesting shuffle about, or continue seeing this shuffle about between provinces here in Canada, as Canadians continue to seek more affordability as well. Alberta has seen a massive boost of population in recent years, and we are Canada's largest GDP driver as well. So when you think about economics, people are going to look for where there's opportunity, affordability, and where they can hopefully make things work for them and their family. So I do think on the next slide here, we're going to talk about Alberta. I do think that will continue to be the story for Alberta, and what has honestly sort of shielded us here in Alberta over recent years, really since COVID times. So let's talk about Alberta. these things apply whether you're investing in WealthShare or buying your own piece of real estate or whatever you're doing. These are really important things when you're considering where to invest in Canada. So a few things. The first thing people always think about when they think about Alberta, of course, is oil and gas. And yes, that is absolutely true. That is a massive part to our sector and our production and our GDP. We are seeing more and more diversification in specifically in Calgary. We're seeing it in Edmonton as well, but even more so in Calgary. And the growth in technology, healthcare, tourism, agriculture, shipping and receiving and logistics. We have manufacturing happening at a pace we haven't seen before in many different sectors of the market. So it's good to see some diversification coming to Alberta. And that's really, being driven by Alberta is open for business, and there is benefits for companies to call Alberta home. So pro-investment policies do definitely drive the economic and real estate demand, and people follow the jobs. People follow affordability and jobs and opportunity, and that's why we've seen such a massive net migration growth. So strong population growth. 2024, our population rose by 4.4%. So that is pretty substantial. In 2024, Alberta's GDP rose by 1.5% from 2023, and ATB projects a 2.5% growth in 2025 and 2.3% in 2026. The quality of life here in Alberta is something that attracts a lot of people as well. Affordable living, lots of space. The mountains, of course, are a big, big deal. And there's just a lot of land here. So there's a lot of room to fulfill your recreation needs here. Last one, rental market. As a landlord, putting my landlord hat on, this is the most important part for me as a landlord. And one of the really main reasons we do not want to manage properties or invest in properties in Ontario and British Columbia. The rental rules here in Alberta are a lot more fair. The only other province we are looking at is Saskatchewan currently right now, but the landlord laws are important because we learned that our property's valuation is driven by our net operating income. And so if we are at serious risk due to weak kind of landlord laws when tenants refuse to pay rent for months on end, or they are damaging property or conducting crime in a property, all of those things are problems and impact our ability to provide consistent returns to our investors. And that is something that we have here in Alberta that is a lot more fair. So that is a big one that'll apply to anyone investing here in Alberta. So what is our investment strategy here at WealthShare? Our goal is to remove as many variables as possible. Put very simply, we are going after properties that are new or new-ish. Our first two acquisitions were court-ordered sales, even though they were on the new side, and just good cash-flowing properties in good areas that we know will perform well, even as the market shifts and pivots and adapts. And I do think this is where we will see possibly some hiccups from out-of-province investors who have invested in this province recently and have only been here during super strong rental markets, super strong sales markets. And what we can bring to the table is we have the experience that we have been investing here successfully through every market condition. So we are looking for turnkey acquisitions to minimize risk, reduce variables, and provide that stability and as much predictability as we can to as our investors. So we are focused on Alberta's strong economy and promising future, which makes a great landscape for us to be investing in. A quick summary of the WealthShare offering. Just a review of a couple things we talked about is that we are open to eligible and accredited investors. If you don't know what that means, no problem. Our team is here to help you with any of those types of questions if you are curious. Second one is that we're open to cash or registered funds, and minimum 5,000. So I do find a lot of people have random amounts and random accounts, and a lot of other groups and funds will not accept those. So we do not discriminate when it comes to that, just the $5,000 minimum. And we're on a continuous raise. So there is no we're done point, or we get to this and now we close our doors. we're building an ongoing open fund that will continue to grow for years to come. So that's what we are building. And the last point there is really, really important, especially if you have capital that's invested with, your bank or other management groups, wealth management groups, financial advisors, is often people go, okay, well, that's all good, but what's your fees? There is no fees to invest with us. All of our fees as a management team are already accounted for when we are targeting our 12% annualized return. So there's no additional fee to you as an investor. The only time there is a fee is if you use registered funds. The intermediary trust company, which we use Olympia Trust, Odyssey Trust, or Western Pacific, they will charge you an annual fee, usually around the $150 mark for your account. And they are there to be kind of the middleman between us and your registered accounts. And as I mentioned, we have a targeted 12% annualized return. We put 8% because we do have an 8% preferred return. I'm going to get to that on the next slide, but we target 12% always. We have an unlimited number of trust units available because of the continuous raise. Our current unit price is $12.50. So that is kind of a quick overview. Couple points I want to add to this is our portfolio is 100% owned by the investors. So I don't have a 50% share or a big stake in this. We are stewards of your money. We are investing our money. We have invested a great deal as well in time, resources, and startup fees and management time. But 100% of the assets are owned by our investors. So we have nearly 300 investors in the WealthShare community, and growing every day. But that's a really important and fundamental difference because that's not necessarily the case everywhere you go and look. So very good question to ask. We do have a lot riding on this as well. All of the debt has been personally guaranteed by us as well. So, we are very much invested in the success of WealthShare as it moves forward. But the portfolio is yours as our investor. So here is the current portfolio. The first acquisition, the Bergen in Mission in Southwest Calgary, the Winston in Windsor Park, also in Southwest Calgary, and Stillwater in Edmonton last year. So that's the units that we have in place right now. These two are townhouse projects, obviously, the Winston and Stillwater, which are really great from a management standpoint and cost standpoint. No common areas, no elevators, that kind of thing. But all of these kind of align with the strategy I was talking about earlier. So why invest with us? We can't grow this without you guys. We really need our investors to be able to grow. We have opportunities we're reviewing all of the time, and I do think this year we are going to see some opportunities. We're being a little bit patient right now on purpose. And we're going to see some interesting things, I think, arise, and we want to be ready for those when they do come. So why invest with us? Number one is our flexible minimum. You get to choose what you want to invest, the expert management team that you have access to, and a targeted 12% passive return is excellent. We believe for the level of risk that you are seeing here. It's not a huge or high level of risk because we have a portfolio that is performing, that is cash flowing, that is doing its thing behind us. And I also want to talk about our returns last couple of years. This is something we're super proud of. We worked super hard to achieve this. And keep in mind, these are audited returns. So our auditor is Grant Thornton, as I mentioned the process earlier, and our 2024 results were 12.61%, and our 2023 results were 11.1%. So we are excited to continue to provide those types of returns. Do you want to check out our offering and everything I mentioned, like the offering memorandum, the audited financials, this slide deck, everything? You go to our exempt market dealer, Atlas One. And I want to talk quick about who Atlas One is and why they're important. So Atlas One, or any exempt market dealer, they're there for a very good reason. They're there to facilitate our investors for us. They handle everything from, questions you might have around your portfolio, or is this appropriate for you, or what is an appropriate amount for me to invest, and any questions about documents. They're there to ensure also that we are compliant with what we're saying we're compliant on. And they're also there, most importantly, to ensure our investors are making informed decisions as to what they're doing with their money. And we have an awesome team there. We've been with them since day one, and they can facilitate investment from British Columbia, Alberta, Saskatchewan, Manitoba, Ontario, and New Brunswick. And they are a really interesting platform. There's all kinds of different offerings on there if you'd like to check them out. And the process with them is pretty simple. You do need to create a profile. It's going to ask you for your name and email. You'll be able to see our full offering on there. So everything we talked about this evening, you can review. If you do want to invest, you can invest right through the platform. It will ask you to upload your driver's license to make sure that you are who you say you are, that you are having a Canadian address, and then you can sign the documents via DocuSign. It's pretty straightforward. For registered accounts, of course, you do need an intermediary trust company, like I mentioned, and the dealing representative that we work with, his name is Ryan. He can help you through that every step of the way if that is of interest. So here's the quick summary again, if someone wanted to review this, but current unit price is $12.50. We're on a continuous raise. And the two things at the bottom I want to point out, especially if you're out there shopping around, comparing us, I always like to point out what you should be looking for and what you should use as a quick snapshot to compare. So number one is always looking at who's eligible to invest in something. And then you want to look at issuer fees and dealer fees. I want to talk real briefly about what those are. Issuer fees, these are the fees that how we make money as the management team. These are not fees taken off of your investment. These are operating costs for us to operate the fund. So we as the management team get a fee for acquisition, for financing or refinancing, an ongoing management fee. And then what's really in it for us in the long run, because I said you guys own all of the portfolio, is we do have a portion of the return. When we hit a 8% preferred return minimum, any cash distributions that are done that calendar year, we do get a 20% performance bonus. So we have to hit a minimum 8%. There has to be a cash distribution. And then we would get, as the management team, we, as in the management group, myself, Rodney, Monique, would get a management bonus for that. So that's really what's in it for us in the long run. And these other fees help us keep the lights on through the year, help us to keep things going for you. And this will be widely varied everywhere you look. We try to model ourselves after other funds that we really like and want to be as fair as possible. So that's the issuer fees. The last one is the dealer fees. And this is outlined in the offering memorandum, but you have to say what the maximum amount the fund would pay for dealer fees. So if someone helps us raising capital, Atlas One does have a fee as well to process investment. It is not 6%, but you have to set a limit of what is appropriate for us to do. We aren't really ever up at 6% yet, but that could arise and we could do that if that made sense for us. So that's what those fees mean. I think they can be a little bit misleading, so I like to outline those. And that is it. This is our information up on the screen. If you'd like to book a call with us, there's our QR code. Our contact information and website is there as well. And we would love to connect with you one-on-one. If you have enjoyed this presentation, if you have questions, we look forward to connecting with you. And just as a reminder that we are real estate investors ourselves. We built this with not just the experience we are bringing to the table, but also what we would want to see out of an investment to build trust, to be transparent, and invest in really good real estate along the way with good returns.